What is the base case scenario at principle? Is it the so-called no-deal hard Brexit, or do you guys ultimately believe that some kind of a customs deal will get done?
Yeah, it seems like the no-deal Brexit is almost entirely off the table. I think we could see some clear confirmation of that within the next few weeks. I think the most likely scenario at this point is that May's withdrawal deal does get some tweaks, might be some major tweaks, in fact, but eventually that should get through Parliament, simply because the alternatives are not liked by the hardline Brexiteers nor the Remainers. So it seems like that is the most likely. But I have to say, I think the path ahead is going to be as jumpy and volatile as we've had in the run-up to now as well. There is no clear way of working through these issues. So I'd expect, we're going to be looking at a very volatile time in the next two months overall.
Well, part of the job of strategists like yourself, Seema, is to plan for the things that maybe are unplannable, the black swans, if you will. I know the no-deal Brexit does seem like the extreme outlier event, but I'm sure you have to make some contingencies for it. We've had guests who've said, well, it'll be a disaster, a catastrophe. They're using words like that. Is that your view as well?
It is. We've had a lot of criticism. I think the Bank of England actually has had a lot of criticism about its forecast for growth to plummet kind of 8% or so if there is a no-deal Brexit. I have to say, I don't think that that's too much of an exaggeration. I think we could expect there to be a significant recession in the UK. I think that all the kind of the scaremongering about how the M25 being blocked up by lorries all the way through, not the M25, but all the way up, sorry, from the ports, I think that's a reality. We are looking at, if this does go ahead in that way to the no-deal Brexit, that Armageddon scenario is possible.
But does trucks blocking a highway mean that the stock market is going to collapse? From the investing perspective, would it be a disaster for the UK market,
yes,
for the mainland European Union markets, and connect the dots, Seema, to the US market? Would a no-deal Brexit hurt the United States equity markets?
Okay, so I think, as you said, there's a couple of steps here. If we have a no-deal Brexit for the UK, I think that the impact on the UK economy is very negative, and therefore on UK equity markets is extremely negative. Some of it would be helped out by a drop in sterling, of course. Now, the impact on Europe is a little bit more complicated now because the European economy is also slowing. And there are growing fears that the European economy is going to be moving into recession at some point later in 2019. So Europe can really not afford to have a UK falling into recession as well. Now, I actually think that instead of worrying about the US here, it's actually what the concerns to do with China, which therefore impacts the whole of the global economy, because the European and Chinese economies, especially for Germany, are very, very closely related through that very strong export relationship that they have. And we have seen that as the German economy has weakened in line with China, it's a two-way street. So if we do see a continued weakening in the European economy, it weighs on the Chinese economy and therefore on global growth, with obvious repercussions for the US. I would hasten to add, though, that in terms of looking at the most, the most important risks for the US economy this year, I would not put Brexit as one of them.
Not yet, but as we get closer to that March date, the nervousness, Seema, may ratchet up. You may have heard that we've got a government shutdown here in the United States, and investors have so far given it a pass. The equity markets are higher this year, but at some point they may not. At what point do you advise your clients take some drastic action if we continue to inch closer to what could be the unexpected outcome?
Those kind of black swan events were things that we can't necessarily plan for, and I think it would be ill-advised for investors at this stage to get so cautionary that they start to go into cash. There's still many opportunities out there. Now, if that scenario does unfold, we should have a very clear idea at the beginning of March, and at that point, yes, there would be some kind of warnings to our investors, but mainly really with regards to the UK, that this is the scenario. For the US, we still don't expect there to be a recession at the end of 2019. If the situation were to deteriorate significantly, and even in that scenario, I still don't put the US shutdown as a key risk to the US economy.
Ultimately, recessions, though, Seema, as you know, recessions are not caused by governments. They're caused by people. People just simply stop spending, businesses pull back. Ultimately, humans make that decision. We had our retail strategist, Stacey Widlitz, on a couple of days ago. She actually lives in London, and she was saying, she's really worried about simply people just not spending. Don't buy that. We don't know what's going to happen with Brexit. Don't go out and buy that new car. Don't make the big purchase, because there's just this great unknown about which way this whole thing is going to go. What is the risk of this sort of self-fulfilling prophecy of a downward spiral economically?
Well, look, when it comes to the UK, I would just kind of hasten to add here that, look, when it comes to the US, we're absolutely advising people that there is still opportunities out there. When it comes to the UK, on the other hand, if you are looking to increase your investments, this is absolutely not the time. If you are holding credit in the UK, bank stocks, this is probably not the time to be dropping them, because you could well be missing out on the trade of the year if things work out. Now, in terms of, is there a risk of a self-fulfilling expectations to push into a recession? Yes, there is. The kind of concerns about business confidence, consumer confidence, then plummeting and pushing into equity markets for the UK is a realistic prospect. And I would absolutely agree with that. But when it comes to the US, I think it's a very different situation.